So where do we start this week? Phew, what a crazy week it's been. Um, GameStop, first of all, went from, I don't know, what are we looking at, $18 or something, to almost $500 in literally a couple of days. Now, I've not seen this any time in my history of trading and investing. Um, it's crazy. I mean, short sellers, of course, if you don't know what short selling is, short sellers are trying to basically borrow shares and then sell them to get the price to go down and then buy back at a lower price so they make profit on those trades. I never really understood why short selling is even allowed. Why would you have to, why would you be able to make share prices go down? In whose interest is that? Only your own interest. It doesn't make sense. What I like about the stock market compared to, for example, forex currencies, currency exchanges and all that, um, stocks normally have a tendency to grow. Companies have a tendency to always be focused on growing, making more profit, making more higher sales, and so on. Foreign exchange, you don't have that because the euro dollar goes from up, down, up, down, up, down, but there's no real long-term trend in many of them. So I think what we're seeing here is the masses revolting against the happy few. And while this is a very interesting trend, and while it's fascinating, it's something that you want to read about, you want to understand it. It's also quite dangerous because hedge funds could actually go bankrupt. And while you might be saying, yeah, but these are the big guys, these are rich guys, and let them go bankrupt. No. Once parties are in trouble, they start selling the assets that they've made profit on. That means that these kinds of actions could trigger a massive sell-off in the markets. So we have to be very careful. Now, GameStop is one. When you see these things going on, I would say please don't be a part of it because you might be the last one to buy and then you might lose all your money. Look at this chart here of GameStop. Yes, it went up to $480 or so, but it also came down very rapidly towards $250. So you could have already lost almost half your money if you bought at the wrong time. So if you're a beginning investor, please stay away from these things. Watch it, learn, but don't take part in it. That's my advice at least. Now the next one that the Reddit forum members are trying to fight, where they're trying to fight the short sellers, is silver. Now I've been a big fan of silver for years already. I started buying gold much earlier, but started buying silver at around $16 to $18. So around the levels here in June 20, let's say before June, especially after the crash last year in March, I've started buying some silver, and now we'll see that the resistance zone is between 28.6 and 29.7, or let's say $30. Incredibly interesting to see whether actually we're going to see a sell-off here. Once it breaks out, we'll surpass the high of last year, which is the August high at $30, and it could go to the old highs. Let's zoom out a little bit. Let's go to the weekly chart. In the weekly chart, you'll see that the all-time highs, we have to go far back towards 2011, I believe. Yes. So we'll look at the all-time highs. We're looking here at $49.65 or something. So the upside is enormous. Now, I believe, and I have a very high confidence level in this trade. I believe also because you see the crossover here happening in the weekly chart. So the MACD shows a bullish cross, the blue line crossing the orange line. Everything, all the indicators that I follow are bullish at the moment. So I have a very high confidence level, and many that I know are the same. If you want to be exposed to silver, either buy physical silver. I prefer to stay away from ETFs, but if you buy physical silver ETFs, and so that also you can follow whether that it gets audited and whether they actually have the physical silver, because physical silver ETFs are supposed to hold the silver basically to back the amount of money that is actually invested in the ETFs. Otherwise, go for mines. I'll show you a couple of examples here. A couple of funds that I've been buying and also following for a long time. Fortuna Silver Mines is one. Fortuna Silver Mines has a high here from 2016, which is around the $10 level. Now we are still in an upward trend since March. You could say, yeah, maybe I bought too late, I should have bought in March. In reality, when March happened, and that could happen again, when March happened, we were in a panic situation. When there's a panic situation, no one really wants to buy those stocks. Yes, there are some that are buying, but the reality is that most people will not buy at that time. So if you bought later, it's okay. If you want to buy now, I think it's still a very good time, because silver is only about to break out. With silver mines, you have to understand this. If the cost of per ounce of silver to get the ounce of silver produced and out of the ground is $10 per ounce, for example, let it be $12 per ounce. If you sell it at 24, you make a gross profit of 50% basically. If you sell it at 36, your margin goes up to 66%. And I think this is what we have to understand, that every dollar that the silver price increases now, the margin of the miners, the margin that the miners make increases exponentially. And that is why I like to be exposed to miners specifically, both in silver and platinum, but also in gold, of course, and nickel, copper. I've got many metals that I like to be exposed to. So Fortuna Silver Mines, I think we're going to see probably today even. I mean, I look at the pre-market here, $9.49, so up 21%. That's the pre-open. Then I think this will go up much higher than this. Bear Creek, $2.78 is the Friday's close. We have a long-term resistance here. I will zoom out to the monthly chart. That goes all the way back to September 2012. So since that time, we've basically been trapped in this range. And I think once we break out of that range, I think we're going to get very close in this month in February, and we might actually already break out in February. Once we get close to once we have a confirmed breakout, let's put it that way, we will look for this level of $7.70. That's my target. So $2.78, you might not be able to buy $2.78 today. I think you'll be lucky to buy $3.50 or anywhere underneath that level. If you want to be really safe, I would always wait for a breakout. So buy at levels of $4 or something. When you have a confirmed breakout, that means the candle actually needs to be closed. The daily candle needs to be closed above the level of $3.85 or so. I think once you get a daily close above that level, I would be pretty confident. If you get a weekly close above that, your level of confidence is even higher, but it could go up really fast, so I think you need to be quick. Then let's look at another one, which is a more junior miner, but one that I really like, is Canada Silver Cobalt Works, sorry. It used to be a cobalt miner. It used to be called Canada Cobalt Works. Then they found a lot of silver and they started focusing more on the silver play, on being a silver play. So now they're called Canada Silver Cobalt Works. CCW is the ticker code. Long consolidation period from anywhere July 2018, I think, until now, so 1.5 years. And once this breaks out, and I believe it will today, it will test the resistance at $70 where a couple of old tops were, 3 old tops actually. Then it will go towards the $90 level. I think this is a matter of time, and once it breaks at $90 level, we'll see $1-2, as we've seen with Pure Gold Mining, one of my other funds that I used to invest in, and I still have actually at the moment. So incredible opportunities here. If we look at some of the platinum miners, because I think platinum is also an interesting one, Sibanye Stillwater is one that I follow. Broke out of a descending trend here, but basically it was a cup and handle. You can see here the big cup shape and then the handle shape. That's what we call a cup and handle pattern. Once it breaks out, normally the target price is the difference between that line and the bottom of the cup, and then you add that to the line, and then you get a price target. So that should be, in my opinion, somewhere close to $24. I think from current $14.90 pre-market to $24 offers you what, 80% upside or something. So amazing opportunities again. And I would like to show you the last one here for the day, which is Platinum Group Metals. Platinum Group Metals is trading at the moment at $3.72. Went up very rapidly from $1.70 to $6 something. Saw a consolidation period here, and we're now probably getting closer to bottoming out. I can't guarantee that we haven't bottomed just yet, but with the platinum price increasing by 4.8% today, I think this is the time. If you get in now, I think you're going to see a very nice upside potential. The first one, of course, to break is that horizontal level at $5.50. Once it breaks that, I think we're going to see we're going to go into the teens, into the tens. You know, we're going to go into 10, 12, whatever. This is a really good one to hold for a longer period. So the potential is just enormous, and for you to start investing now is just such a great, it's amazing timing, really. I mean, we're basically, if you follow commodity markets trade, they have 10-year bullish periods, they have 10-year bearish periods. You need to be at the right timing, and I think the right timing is now. So good luck with that. Let's keep each other posted. Cheers.